Guys, I thought you might be looking for some ideas on how to use the money you saved during the pandemic. Let's say you have $1 million you want to invest into assets and make $3 to $5 million in a few years. Hey everyone, welcome to the channel. In today's video, we're going to go over the top 10 best ways to invest $1 million. So without further ado, let's get into it. Number 10. Invest in real estate. Suppose you want to be involved in a specific real estate business but don't want to get involved in the day-to-day operations. In that case, you might consider investing through real estate crowdfunding. There are several marketplaces to choose from, each with its area of expertise. CrowdStreet is one of the best websites since it only sells commercial real estate. Secondly, investing through a real estate investment trust, shortly REITs, is also an excellent way to start. Each trust owns many properties. It allows you to diversify your investments while spending less money. They're often distributed around different geographic markets, preventing your entire real estate investment from being concentrated in a single region. One of the REIT's major benefits is that they are legally obligated to distribute at least 90% of their net profits to shareholders. Number 9. Invest in rental properties. Renting individual properties, such as apartments, penthouses, houses, small commercial properties, or even customized ventures such as fix and flip projects, is another way to spend $1 million. Additionally, if your property is an attractive location, you might create a profitable short-term rental business via Airbnb. Real estate can be very profitable in the long run. For example, if you put down 20%, $60,000, on a $300,000 small duplex and rent it out for a total of $2,500 per month, you'll make a monthly profit while still paying the mortgage. After 30 years, the combination of property appreciation and mortgage repayment would result in a mortgage-free property. You then have the choice of selling the property for a significant profit or continuing to rent it and reaping an even greater net cash flow. If you'd like to learn more about how to succeed in real estate, click on the video link in the top right corner. Number 8. Digital assets. These digital assets serve as both an investment and a company. You may buy digital assets such as an e-commerce business and its website. Then you'll need to put in some time and effort to increase their value. But if you do, the payoff can be significant. Some of the best digital assets in the market are online courses, membership sites, video or audio content, apps or online games, AI, and VR solutions. Without a doubt, investing in them is definitely profitable for people with $1 million. How much benefit would you expect from your investment? Many websites, for example, are sold 24 to 36 times of their monthly sales. A site that generates $30,000 per month is worth around $1 million. If you can increase the monthly revenue from $30,000 to $100,000, you will be able to sell it for $3 to $3.5 million while also making money until it's sold. Sounds cool, right? Number 7. Invest in a business. This is one of the most profitable ways to invest your money. It can be accomplished in one of two ways. You may either invest in a new company or work as a silent investor in an already existing one. If you want to invest in your own company, you can either start one from scratch or buy an existing one. Buying an existing company would usually take more money, but it would be less risky than starting one from scratch because it's already developed. In any case, make sure you're familiar with the company and confident in your ability to make it a success. The failure rate for new companies is shockingly high. If the idea of starting your own company does not appeal to you, you can become a silent partner. This is when you put money into a profitable, developed company that needs capital for expansion. In return for your contribution, you will receive a part of the company's ownership. This also entitles you to a share of potential earnings. Number 6. Venture capital funds or angel investing. Having $1 million for investment is a lot of money. A seed investment varies between $10,000 to $100,000. Angel investing is when a new startup needs money and helps to take the project off the ground. You might be the one who provides that capital and expertise in exchange for a percentage of the business. With the age of tech startups popping up left and right, everyone wants to think of themselves as angel investors. Truth be told, this is probably the highest risk option out of this entire list. No matter how good you are, if the company you're investing in isn't the one to take the project where it needs to go, it will fail, and so will your investment. This money is used to get the company to create what is called a minimum viable product and pick up a bit of traction. Based on how well you do at this stage, you can then go ahead and raise more funds at higher valuations. Seed investments aren't as complicated as they seem, but you never want to be someone who doesn't bring anything else to the table apart from money. Only invest in businesses you understand and have the expertise and connections to accelerate their growth. The entire process used to be rather complicated, but today, you have plenty of great options where you can invest in startups from anywhere in the world. Eventually, join other like-minded angels and create a venture capital fund that you can specialize in. Number 5. Cryptocurrencies. Although the financial media has been astonished by the stock market's swift and full rebound from the February-March 2020 crash, cryptocurrencies may have been the true stars of the show over the past year. Let's take Bitcoin as an example. Bitcoin skyrocketed from less than $8,000 in early 2020 to a recent high of more than $60,000. That's a return of more than 750% in just 1 year. That doesn't mean that you can run out and invest heavily in this or any other cryptocurrency. However, it seems that Bitcoin is gained from the uncertainty surrounding the coronavirus and its economic consequences. Ethereum and Cardano, ADA, are two other cryptocurrencies in which you can invest your capital. For trading cryptocurrency, Binance is one of the best platforms. If you'd like to learn more about how to succeed in cryptocurrencies, click on the video link in the top right corner. Number 4. Invest with a robo-advisor. What if you just set your limits, add funding to your account, and let the algorithm do the job for you? You don't need to pick stocks and handle the funds in your portfolio. Instead, let a robo-advisor create and manage your portfolio for you. Tell the platform about your risk tolerance and goals, and go about your business. Robo-advisors build a balanced portfolio of stocks and bonds, with some also including natural resources and other industries. Best of all, they charge very low prices for the service, usually no more than 0.25% of the value of your portfolio. A $1 million portfolio can be fully run for $2,500 per year. Number 3. ETFs or index funds. What's the safest way to invest in the market as a whole without taking on the risk of individual stocks or bonds? Invest in exchange-traded funds, ETFs. These are low-cost funds that invest in either stocks or bonds and are often based on well-known indexes. For example, if you want to invest in large-cap stocks, you can buy an ETF based on the S&P 500 index. The fund structure is similar to that of the S&P 500. You might be wondering about the difference between ETFs and index funds. The key difference between ETFs and index funds is that ETFs can be exchanged like stocks during the day, while index funds can only be purchased and sold at the end of the trading day. ETFs are intended to balance, not outperform the market. However, it has a significant advantage in that it would not underperform. They also have very low cost-to-income ratios, so you can keep a greater chunk of the investment return they provide. Number 2. Bonds. Bonds are primarily concerned with capital preservation, while stocks are concerned with portfolio development. Since they pay the entire face value at maturity, if you keep until the bond matures, you'll at least get back your initial investment. Meanwhile, you collect interest profits. Bonds act to offset the risk involved in stocks. Since they pay interest and promise principal redemption, their prices fluctuate much less than stocks. Short-term interest-bearing securities, typically those with maturities of 5 years or less, hardly fluctuate at all. Longer-term bonds values will fluctuate in response to changes in interest rates. Number 1. Stocks. Stocks are traditionally the most important part of the majority of people's portfolios because they provide growth. Stock investing will also help to protect against inflation. Over the long term, the approximately 10% average annual return provided by stocks would help you cover not only inflation, but also expand your portfolio. Just a kind reminder, you can achieve 10% with index funds or ETFs that I was talking about a while ago. If you choose the personal path, also known as self-directing investing, you'll need to open a brokerage account to trade stocks. You can choose from among the many excellent online brokerage firms. However, keep in mind that the value of stocks can fluctuate. You'll need to keep yourself cool through the ups and downs, understanding that if you have a diverse portfolio, the long term will work in your favor. If you want to learn more about how to succeed in stocks, click on the video link in the top right corner. With that being said, here we come to the end of our video. Which opportunity do you think is most profitable? Let us know in the comment sections below. Please do like this video, as this boosts our motivation to bring more information and business tips to you. Also, don't forget to subscribe to the channel so you never miss any video. See you in the next one. Till then, take care, and thanks for watching.